Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Riot Platforms.
If you find our talks useful, please consider subscribe, like, and comment underneath.
So we have a really interesting one today. We're looking at a company that's technically in one box, but all the data, especially the news from this month, it suggests it's becoming something else entirely.
We're talking at Riot Platforms, ticker RIOT. And, usually when you hear that name, the association is immediate.
Bitcoin mining.
Exactly. Bitcoin mining. You think volatility, crypto cycles, all that stuff. But looking at the notes you've pulled, there's a real split happening. The market seems to be treating them like a miner, but their actual operations are pivoting hard.
That's the core friction right there. That's what we need to analyze. If you're still valuing Riot just as a crypto miner, you are, I think, potentially missing the forest for the trees. The thesis we have to test is whether they're actually turning into what some are calling a sleeping giant of AI infrastructure.
A sleeping giant.
It's a big pivot from digging for digital gold to, well, providing the picks and shovels for the AI revolution.
Sleeping giant is a strong label.
Yeah.
When I see companies suddenly pivoting to AI, I get a little skeptical.
As you should.
It often feels like marketing fluff, right? Just throwing a buzzword in a press release to get a stock bump. But we have a real catalyst here, don't we? This isn't just talk.
No, it's ink on paper, and that's the so what of this whole deep dive. This January, Riot announced a definitive lease agreement with AMD.
AMD. The chip giant. Okay, so that's not a small partnership. That's not some startup just kicking the tires.
It is a massive validation. But let's break down the actual terms because the details really matter here. Riot is leasing 25 megawatts of power capacity at their Rockdale facility to AMD.
Okay, 25 megawatts.
And over the 10-year term of this lease, that's projected to generate roughly $311 million in revenue.
Okay, let's pause on that. $311 million over 10 years. That's about $31 million a year. For a company of Riot's size, that doesn't sound world-changing on its own. It's nice, but is that really the whole story?
You're right to question the raw number. If it stopped right there, it'd be a nice bonus, but it wouldn't change the thesis. The real key, though, is the optionality attached to the deal. It's not just the initial 25 megawatts. The agreement includes options to expand all the way up to 200 megawatts.
Okay, now we're talking.
If AMD exercises that full expansion, we're suddenly looking at a potential revenue stream of over $1 billion.
So the $311 million is just the toe in the water. The billion is the whole swimming pool.
Exactly. And critically, this revenue is it's a different quality from mining revenue. Mining revenue is all over the place, this AMD revenue. It's high quality, recurring, infrastructure-grade cash flow. It's a real convergence of crypto mining and what we call high-performance computing, or HPC.
Right, HPC. For anyone listening, that's basically the massive, massive computing power you need to train AI models, isn't it?
Correct. Supercomputers, essentially. And the market saw this shift immediately. When that news broke, the stock jumped over 16%.
Oh.
It hit intraday highs of $18.82. That price action tells you the market is waking up to the fact that Riot isn't just a power consumer anymore. They're becoming a power distributor for big tech.
It's a compelling narrative, selling the electrical outlets during a gold rush. But, as we always say, a narrative without a balance sheet is, well, it's just a fairy tale. You can't just pivot an industrial operation like this without serious capital.
They don't build themselves, no.
So I want to look under the hood. Does Riot actually have the money to do this, or are they going to have to dilute shareholders to pay for it?
The perfect question. So let's look at the fundamentals from their Q3 2025 earnings. The numbers were surprisingly strong. They beat estimates with revenue hitting $180.2 million. But the real story is the profitability.
Which is so rare for miners. Usually their balance sheets are just a horror show of cash burn.
Right. But here, net income swung to a positive $104.5 million. Compare that to the year before where they were posting big losses. And adjusted EBITDA, that came in really strong at $197.2 million.
That's a serious turnaround. But I'm looking at your notes on liquidity. We talk about war chests, but this seems unusually large.
It's immense. Their balance sheet shows unrestricted cash. So actual dollars in the bank of about $330 million. But then there's the Bitcoin treasury.
The dragon on its hoard of gold.
They're holding over 19,000 Bitcoin. Now that price moves, but depending on the day, that treasury is worth somewhere between $1.7 and $2.2 billion.
That is an incredible safety net. but it's also a risk asset. Still, I see they have been using it. They sold some in December 2025.
They did. They sold about 5,818 Bitcoin for around $161.6 million. And this is really important strategic behavior. They're not selling out of desperation. They are selling to self-fund.
Oh, okay.
They're taking that capital and pouring it right into expanding their AI-ready sites at Corsicana and Rockdale.
Which is the smart move. It means they don't need to take on high interest or toxic debt. They're basically their own bank. They mine the money, then spend it on infrastructure.
And that financial independence leads directly to their competitive moat. Because in the data center world, it's all about power. You can buy all the NVIDIA chips you want, but if you can't plug them in, they're just expensive paperweights. Riot has access to 1.7 gigawatts of power in Texas.
1.7 gigawatts. I mean, for perspective, that is a truly enormous amount of power. Enough to run a major city.
It's massive, and it's so hard to get that kind of grid connection approved today. Riot already has it. And crucially, they're vertically integrated. They own the infrastructure. This gives them this unique ability to just toggle.
An arbitrage.
Exactly. When Bitcoin is flying and mining is super profitable, they mine. When leasing that power to AMD for AI is more lucrative, they just flip the switch.
They're an energy trader disguised as a tech company. I see a note here about power credits. They made $6.2 million in 1 month just from that. How does that even work?
It's the beauty of the Texas grid, ER. When the grid is stressed, like during a heat wave, power prices spike. Riot can just voluntarily shut down their miners, release that power back to the grid, and they get paid for the power they didn't use.
So they get paid to turn off their own lights.
Effectively, yes. It's a win-win loop for them. So you've got this company with a huge war chest, a potential new billion-dollar revenue stream, and a power advantage that's almost impossible to replicate quickly.
Okay, so fundamentally, the story holds a lot of water. But let's separate the company from the stock. A good company can be a bad investment if you buy at the wrong price. What are the charts telling us? Have we missed the boat?
The technical setup is actually looking very constructive. The stock's breaking out of what's called an accumulation phase. That's basically where the price moves sideways while, the smart money quietly buys up shares. It's trading now between about $17.30 and $19.05.
And we're getting close to that 52-week high of around $24.
We are, but you have to remember the context. The 52-week low was $6.19. So the psychological momentum has completely shifted from survival to growth.
What about volume? Was there real conviction behind that 16% jump on the AMD news?
Massive volume. 53.6 million shares traded hands that day. That's institutional volume. That's not just retail traders. That's big funds positioning themselves.
And the options market, is it leaning bullish or bearish?
Oh, very bullish. Call options are leading put options by a ratio of 3-to-1. People are paying up to bet on more upside.
However, I have to be the risk manager here. We can't talk about this stock without putting a giant warning label on it about volatility.
Oh, absolutely not. The beta is 3.67.
3.67. So let's break that down. A beta of 1 means you move with the market. A beta of 3.67 means if the S&P 500 moves up 1%, Riot tends to move up almost 4%.
But the reverse is also true.
And that's the kicker. If the market drops 1%, Riot can tank by nearly 4%.
It is high octane. It moves fast. If you check your portfolio every hour, the stock will give you an ulcer. But right now, the momentum is clearly to the upside.
So charts look good. Fundamentals are solid. What's the Wall Street consensus? Are analysts buying this sleeping giant story?
They're starting to. The consensus is a strong buy. Piper Sandler has it as overweight with a $26 target. That's, about 55% upside from here?
And Cantor Fitzgerald is even higher than that.
They're very bullish. They have a $31 target. That's almost a double from where it's been trading.
Which suggests they think the market is severely mispricing this asset.
I think it shows they're starting to re-rate it. They're stopping to view it as just a crypto proxy and starting to see it as a data center utility play. And utilities trade at much higher valuations than miners. We're seeing internal shifts too. The CFO transition to Jason Chung is widely seen as a move to get the C-suite ready for more enterprise clients.
Aligning the company with the new AI strategy.
Exactly. And right now it's trading at 16 or 17 times earnings? Most fair value estimates are closer to $27. So institutions see a value gap.
Okay, I'm getting the bull case. It's exciting. But my job is to find the cracks in the armor. Let's talk about the bear case. What could go wrong here?
This is crucial. We have to talk about the elephant in the room, Bitcoin dependency. As of the last numbers we have, 92% of their revenue was still coming from Bitcoin mining.
So if Bitcoin sneezes, Riot still catches a pretty bad cold.
Precisely. If Bitcoin were to crash, and we've seen it dip below 86K, The stock drops hard. It fell 11% on a recent dip. You are still tethered to that crypto market cycle. The AI revenue is the future, but Bitcoin is very much the present.
And what about the cost? Building these data centers is incredibly expensive.
Dilution is a real concern, yeah. CapEx for Q4 2025 alone is planned at $153 million. They're spending heavily. So here's the risk. What if the Bitcoin price drops and they can't sell their treasury at a good price? Where does the money come from?
They might have to issue more stock.
Which dilutes existing shareholders. And then there's the valuation, a PE of over 41. That's expensive for an industrial company. It's priced for perfection.
There's one more risk I want to touch on, and it's execution. It's a cultural thing. Mining Bitcoin is, well, it's technically simpler. If a miner goes offline for an hour, you lose a little revenue. But serving a client like AMD, that requires 99.999% uptime.
That's the jack-of-all-trades risk. Can a crypto miner really meet the insane demands of a hyperscaler? It's a totally different operational beast. A failure there could destroy their reputation in the AI space before they even get started.
So weighing the huge potential of this pivot against the very real risks, where do you land? What's the final verdict?
When you put it all together, the assets, the cash, the power, the skull comes out to a bullish 910.
A 9. That is very high confidence.
It is. And here's the elevator pitch for why. Riot is basically the only player with that much power capacity, that 1.7 gigawatts ready to go now for the AI boom. Everyone else is waiting years for grid hookups. Riot has the plug ready.
And in this world, speed is everything.
Speed is the currency of the AI arms race, and Riot is doing this while sitting on a $2 billion Bitcoin safety net. Remember, the AMD deal is just 25 megawatts. They have hundreds more available. This is just the first domino.
So for an investor, what's the time horizon? A quick flip?
No, I see this as a multi-year hold. It's a convergence play. You're betting on a crypto recovery and the scarcity of AI infrastructure. It's a dual-engine growth story. It will be volatile for sure, but the trend is up.
And any key dates for people to circle on the calendar?
Definitely watch for the Q4 earnings on February 23, 2026. That's the next big checkpoint. We want to hear updates on Corsicana and Rockdale. If they announce another partner, that stock is going to react.
February 23rd. Got it. You know, what's really sticking with me is this idea of power as an asset. We used to think of the chips or the data centers as the asset. But in a world where AI is drinking electricity like crazy, maybe just having the rights to 1.7 gigawatts of power is the most valuable thing Riot actually owns.
That's a profound way to look at it. In an energy-constrained world, the one holding the extension cord is king.
Something to think about. If you enjoyed this analysis, hit subscribe and leave a comment. We'll see you tomorrow.